All right, it's almost 10:01. We are gonna get started. Thank you for all of you who have taken the time to join us today on this awesome presentation for introducing FIRPTA, a big mystery to many with lots of misconceptions and how it impacts foreigners. I thank you very much for coming today. My name is Ricardo Teran. I am the co-founder of Folio Title. At Folio, we are title Sherpas. We guide real estate agents, buyers, sellers, and investors through the complexities of real estate transactions, both residential and commercial real estate transactions, and we try to lead them to win-win outcomes. Today's presentation is not a substitute for any advice from tax accountants or attorneys. Nothing in the presentation today should be considered a recommendation or tax advice. Buyers and sellers are ultimately responsible for understanding these concepts and their implications. And given that each situation is unique, the examples we use here today may not represent all cases. So definitely it's important that the right professionals consult with your clients on such a delicate topic such as FIRPTA. So, what is today's agenda? Well, we're going to talk about what is FIRPTA, and we're going to do a quick dive into the wonderful world of taxes. We're going to talk about the logic behind FIRPTA, do some FIRPTA math, and who does FIRPTA apply to? We'll go through different scenarios, right, of how the withholding works, determining if the withholding applies. And then we'll talk a little bit about the role of the real estate agent in the transaction that where FIRPTA applies, and a couple of strategies that sellers can employ. So let's start with what is FIRPTA. FIRPTA is an acronym for Foreign Investment in Real Estate Property Act, which was established in 1980. It says that any foreign non-resident or non-resident individual, corporation, or partnership that sells property in the United States is subject to the provisions of this tax act, which mandate a withholding of a percentage of the gross sales price at the time of sale. What does that mean? That any foreigner or any non-US taxpayer that sells property in the United States is subject to having a percentage of the sale proceeds. As you can tell, this is an old law. Myths that this is a new law, but this was basically passed essentially during the Reagan administration when there was a lot of foreign activity in real estate, and where not only were some of the sources of those funds suspect, but many of the foreigners that were selling were taking all the money without paying any capital gains tax and leaving the country. So this is coming from the early 1980s. FIRPTA is not a tax. This is one of the biggest misconceptions about FIRPTA. FIRPTA is a withholding or an advance payment towards a potential capital gains tax. The FIRPTA law actually makes the buyer responsible for finding out if the seller is a foreigner or a non-US taxpayer, and makes the buyer responsible for the withholding, and makes the buyer responsible for sending the money to the IRS rather than relying on the seller. So this is one of the biggest misconceptions about FIRPTA. Even though FIRPTA withholding is on the seller's proceeds from based on the purchase price, because the law can only control the funds at the source of the buyer, they make the buyer the one who has to do, who is responsible for the withholding. Naturally, many buyers will rely on their professionals that they hire to settle the transaction, the title company, the attorney doing the closing. They will be the ones who, on behalf of the buyer, will do this withholding and ensure that the money makes it to the IRS. So now that we talked about FIRPTA, let's take a quick dive into the wonderful world of taxes so that we can understand where on the tax map FIRPTA is. As one of the founding fathers, Benjamin Franklin, said, nothing can be said to be certain except death and taxes. Because there is a lot of confusion as to what level of taxes FIRPTA will fall on. We obviously know about local taxes, right? These local taxes are like property taxes, where they're divided into ad valorem and non-ad valorem taxes. All that means is that some property taxes are related to the value of the property, other property taxes are not related to the value of the property. We have some state taxes. Here you can think about transfer taxes, such as dock stamp taxes or intangible stamp taxes. And then we have federal taxes. At the federal level, tax, which we all know and love, we have, as part of an income tax, we have what is called the capital gains tax. The capital gains tax is essentially any tax on the appreciated value of an asset. If you buy an asset for 100, you sell it for 500, you had a capital gains of 400 on the difference. The capital gains tax is applied towards that 400 difference, therefore it's called the capital gains tax. FIRPTA is related to the capital gains tax. So even though that FIRPTA itself is not a tax, it is a withholding for a potential future capital tax gain. Another kind of federal tax that comes into play a lot in real estate are estate taxes, which are taxes that are due when the owner of a real estate property passes away. Now, there's all sorts of exceptions to estate taxes. If you are a U.S. taxpayer, you could move potentially start paying estate taxes under the current 2024 tax regime. And if you are not a U.S. taxpayer, if you are a foreigner, you only can move $60,000. You can only inherit $60,000 before capital gains tax. So there's a big difference. If you're a U.S. taxpayer, you can inherit a million. If you're a foreigner, you can inherit 60,000. Almost every piece of real estate property is worth more than 60,000. So if the owner of one of these properties is not properly structured and they pass away, they would have estate tax. Okay. Now, um, basically, FIRPTA is related to these capital gains taxes, right? And a withholding towards those capital gains taxes. So now let's look at the logic behind FIRPTA. Okay, why does the federal government withhold based on the sales price? Well, it's the largest and most reliable amount from which to capture the withholding. That way, they motivate sellers to file their tax returns on the transaction and potentially recover an excess payment. Now, when you talk to foreigners about the fact that a prepayment, a deposit essentially towards a possible capital gains tax may be returned by the federal tax authorities, most foreigners laugh at you because they say, well, in my country, if you deposit any tax money, you'll never see it again. Well, in the United States, you actually do see it again. However, you have to fulfill your duty as a seller to submit your tax return on the transaction. So if the law makes the buyer responsible for the actual withholding, it still makes the seller responsible for the tax return. And if that seller's tax return shows that no tax is owed, the IRS, which is the federal tax authority, will evaluate that and make a determination if you are due the difference of the excess payment. Now, why withhold at the time of the sale? Well, this is really the only moment when the government can capture funds before the foreign seller takes control of the funds and potentially disappears before paying their tax liability. So obviously, because they make the buyer responsible, literally they know where you live, kind of thing. If the buyer is stateside and the buyer fails to take on that tax withholding, the federal government can then go behind the buyer. No buyer is going to take that risk. So actually, the way that the federal regulation for FIRPTA is written, it actually is written in a way where it assumes that any real estate seller is a foreigner until proven otherwise. In other words, the default is not, let's see if FIRPTA applies. The default is FIRPTA applies on everything except if you show me that you are a US taxpayer. That way they can of, they can minimize, the amount of tax evasion. So now we're going to go back to doing some simple math to understand the mechanics of how FIRPTA works. Let's talk about a scenario where you bought a property for $120,000. You made $30,000 in improvements, and now you have a cost basis of $150,000. When you sell the property, if you sell the property for $200,000, you have to subtract the costs of the sale. We use 7.5%. We're calculating more or less 6% commission plus 1.5% of expenses. That would be equivalent to 15,000. We then subtract this cost basis of 150,000. And so after we subtract from the sale price the cost of the sale and the cost basis, our profits are $35,000 on that sale. Now, how does that impact taxes? Tax of 20%. In many cases, it's lower, but let's just assume percent. And so 20% of the $35,000 of capital gains profit is $7,000. This right here is your tax bill. Your tax bill is $7,000. Now, what about FIRPTA? Well, if you remember, FIRPTA is taken from the purchase price. So 15% of the purchase price is $30,000. And I apologize if my video is covering this last table. I will move it for you. I'm sorry about that. I miscalculated. Um, if FIRPTA is 15% of the purchase price, the withholding at the time of the sale is $30,000. But the tax you owe is only $7,000. So if you file your taxes correctly as a foreigner, you submit the tax return with a CPA, you will basically tell the government, I believe that I'm owed back $23,000. I overpaid, I over deposited $23,000. And the IRS will make a determination. And if they agree with you, they will return the $23,000, assuming you don't have any other outstanding tax obligations associated with your ITIN or your property. Now, what happens in the situation of a loss? Okay, it gives us a cost basis of $150,000. But this time we only get to sell the property for $155,000. A 7.5% cost to selling the property. And we have the same cost basis, but we had a net loss of over $6,000. So here we do not have a capital gain, we have a loss. So a tax of 20% on a loss is zero. You don't owe tax on something that you did not gain. However, FIRPTA still applies. They still withhold 15% of the $55,000 sale price. 15% of that sale price is about $23,000. You do not owe any taxes. So in theory, they will need to return to you, the IRS, the whole difference. Now, returning you the money dependent on the accuracy and timeliness of the FIRPTA tax return. Let's look at in the scenario where what occurs in terms of profit, and let's look at, for the seller, what occurs on their sale proceeds. So again, we have a $200,000 purchase price. There's a cost of sale. This is the sale price, right? This is when the original buyer sells. They sell a scenario where they're going to make a profit. They subtract the 7.5% of the cost. They subtract the cost basis. They have a $35,000 profit. They owe $7,000 in taxes. They made $28,000. What did we say they bought it for? They originally bought it for $120,000, and now they're walking away with $28,000 in net gains. But what happens to the cash flow of the transaction, right? What does the seller perceive? Well, the purchase price minus the cost of the sale minus the FIRPTA, which gets withheld at the time of the sale. They will walk away from the closing table $155,000. This FIRPTA is sent to the IRS. IRS subtracts $7,000 of the taxes owed. $23,000 FIRPTA refund. If you add your $23,000 FIRPTA refund to the $155,000 that you walked away with at closing, your net receipt from the sale of $200,000 is $178,000. Now, let's look at the case where there is a loss. In this case, you sold it for 155, you had the cost of the sale, you subtract the cost basis, you had a loss. You don't know any tax, but you still had a loss of $6,625. What happens on the day of closing? Well, you take the 155, you subtract the cost of the sale, but there's still a FIRPTA withholding. So the 15% of 155 is 23,000. So from the 155,000 that you sold for, you're walking away in the closing table with 120. Now, because you rest and you don't owe any taxes, theoretically they're going to give you. Now, this is the scenario of a loss. Remember that in this scenario, you bought the property 120, but you added $30,000 of improvements. So out of pocket, you were at least $150,000, right? At the end of the day, if you lose money on this transaction, you're walking away with less than 150,000 after the FIRPTA withholding is complete. Okay. So now let's talk a little bit about who is subject to FIRPTA. Okay. So FIRPTA affects any foreign individual, the tax code, not by immigration law. Any foreign individual who is a non-resident, as well as foreign companies that are not treated as domestic corporations. Okay. So for example, you could be a company that declares itself as a C corp and you're a corporation, right? Now, you need evidence from the IRS that that is true. You need a letter, right, that shows that you are a domestic corporation. Now, many people are formed as LLCs. And so a big question is, are LLCs subject to FIRPTA, right? And it depends on the number of members. One foreign, if an LLC has one foreign member, then FIRPTA would apply. If the LLC has multiple foreign members, then FIRPTA does not apply at the transactional level. So at the closing table, there will be no FIRPTA. There will be a withholding later, possibly at the partnership level. This is where we need the advice of accountant to not apply in the transaction. Now, FIRPTA does not apply to corporations. So it is very important that if you are a foreigner and you're thinking of selling a real estate asset, before you go under contract, you have a consultation with a CPA or a tax attorney. Now, the financiation will be done by this CPA, not by a tax preparer, but by a CPA, because FIRPTA is a tax issue, not a legal issue. So on a sale, the foreign seller must submit a FIRPTA declaration, right? In other words, they're subject to the FIRPTA withholding. There is paperwork that must be submitted. Now, if you are not subject to FIRPTA, if you are not a foreigner, you must sign a sworn statement called a non-foreign affidavit. Now, a non-foreign affidavit basically is your declaration, um, is a declaration whereby the domestic seller, the U.S. tax, says under oath that FIRPTA does not apply to them because they are non-foreign. They are a U.S. taxpayer. They provide a social security number, for example, or an ITIN number with proof that they are a U.S. taxpayer, right? Because many foreigners have ITIN numbers, but they are not U.S. taxpayer. They only have a taxpayer identification number. And again, the reason this is required is because the IRS considers all real estate sellers as foreigners until they can prove otherwise. So how does a declaration form work? Well, if you are subject to FIRPTA, the reason you want an experienced tax professional and an experienced title company is because the forms have very specific instructions. And if you fill out the form incorrectly, the IRS has a small window to correct it. And more times than not, you will have problems if you are owed any money back. Now, the declaration requires a taxpayer identification number from both the buyer and the seller. If the seller does not have a taxpayer ID because they're a foreigner, as part of the FIRPTA process, they need to apply to an ITIN number. Now, there's two separate tracks for these FIRPTA forms. One is the normal form where you submit what is called the 8288 form. And essentially, this 8288 says that you will send your tax return on the transaction in the next fiscal exercise. So, for example, if you close between now and December of 2024, the next fiscal exercise is, January to April of next year. But if you close at the beginning of next year, you would have to wait till the following year, till 2026, to submit the 8288. There is another way, which used to be the quote unquote expedited form. This expedited form would allow you to submit a tax declaration any time of the year, and you would wait usually 120 days for a determination. This was the 8288B form. Now, unfortunately, after COVID, this 8288B form, which is essentially an application for what is called a withholding certificate, the timeframes for this have uh, gone from 120 days to over a year. So this has disincentivized a lot of sellers from using this method, and many sellers are now using the traditional 8288 form. Okay. Now, when does the withholding apply? Because there are several exceptions. Okay. So, um, first, these exceptions need to be confirmed with an accountant. Okay. That's important to know. Second, well, example, when there are multiple partners in an LLC, right? The accountant needs to confirm if the withholding is going to be done at the partnership level, right? So if you're working with a closing agent and you're telling the closing agent as a seller that FIRPTA does not apply, they may require a statement from your CPA. Now, one of the most common exceptions for the avoid the FIRPTA withholding is when the foreigner for which FIRPTA applies sells the property for someone who will live in the property, who will make it their homestead property, or will make it the homestead property of their family members. Okay, so family members property and on title you can have these other individuals, right? So this is very common. For example, by a university student a property so that during the 4 years of university their kids can live in that property instead of campus. If the kids live in that property, the parents could say that they're on title and it's going to be the family's living property. So if a buyer intends to live in the property, then we can figure out if a reduced withholding will apply or if an exception to the withholding will apply. So what first is the people who purchase the property must have definite plans to use the property as their residence for themselves or a member of families for at least 50% of the number of days during the first two 12-month consecutive periods. In plain English, that means for 50% of the next year and 50% of the year following. So it can't be that you use it for your first year and not your second year, or it can't be that it's empty the first year and then you use it the entire second year. If the buyer and their family have definite plans to reside and they are willing to sign an affidavit, then there is a second condition, which is the sales price of the property as their primary, as their residence. Then, if the property is worth less than $300,000, there is zero withholding, 0%. There's no FIRPTA. So this IRS residency affidavit needs to be signed before closing by the buyers and notarized. And if the property is less than 300,000, there is no FIRPTA withholding. Now, if the property is between 300,000 and $1 million, the withholding is 10%. It is a reduced withholding, okay? But an IRS residency affidavit signed by the buyers is also required. Now, all properties that are over $1 million, there's no exception, even if you use it as a residence. If the buyer or buyer's family do not have plans to reside or don't sign the affidavit, then the law requires you to withhold 15% of the purchase price. Now, this is important because signing the affidavit is not contractually required unless you make it part of the contract. So it's very important that the real estate agents that listen to this webinar understand that if you have a listing by a foreign seller, the seller is going to require as part of the contract an IRS residency affidavit, because otherwise, you should basically make that public to the buying consumer, that would be a condition of the sale, is selling to somebody who will sign the affidavit. Now, this has a downside. If you only sell to individuals who may live in the property, anybody who is buying as an investment under an LLC or a corp cannot sign that affidavit, because neither an LLC nor the corp can live in the property. Okay. So now, what's the role of the real estate agent? Well, if you are a listing agreement, this is the moment to educate your client on FIRPTA, right? This is where you will figure out if the client is going to have independent legal representation and if they have an accountant. You can start here talking and understanding with your client if the client's going to submit an 8288 or they're going to apply for a withholding certificate. You need to determine if the seller already has an ITIN, and if not, they're going to need to apply for one. And then you need to decide on your MLS marketing strategy. Are you going to put on your MLS that the property is subject to FIRPTA withholding and that the seller is interested in receiving offers from people who will use it as a residence and that will sign an IRS residency affidavit? This is a very important condition to be transparent about and to disclose on all documentation to possible buyers. If a buyer says, yeah, sure, I will sign it later, and then the closing day comes and they don't sign it, you have no legal enforcement mechanism to get them to sign the IRS residency affidavit. Now, in terms of the MLS listing, you could decide, or your seller, I should say, could decide to market investors, right? You will eliminate all LLCs and all corps. If you have an individual investor who maybe is doing this as part of a visa application, it's up to them to decide if they can sign the IRS residency affidavit or not. I suggest to listing agents that whose sellers do make it a condition that you attach the IRS residency affidavit in the MLS listing. This is as transparent as you can be. There is no penalty for doing this. You're giving a disclosure that is a condition of the sale, right? Now, in the contract, if this will be a condition, you need to ensure that there's contractual language that enforces the buyer having a social security number or an ITIN. Okay, there are many foreign buyers that do not have ITINs. If the foreign buyer does not have an ITIN, to submit the forms, you need to have the buyer apply for an ITIN. Now, you also need to ensure, like we've said, that the language of the residency affidavit is in the contract. Now, before closing, if you are the listing agent, you want to make sure that the closing agent that is hired has experience with FIRPTA. They have to know that there's extremely strict timeframes to submit the forms and the FIRPTA withholding. There are very large penalties that are incurred if this is not. You also want to know what the additional fees are for the withholding certificate to the IRS. It is held in escrow until the IRS makes a determination. Most closing agents have additional fees for that. After closing, you want to make sure that if the money is sent to the IRS, you obtain a proof of funds of the IRS check sent, and you probably want to follow up in about 30 days to ask the closing agent to provide a copy of the cashed check, right? Sometimes it'll take the IRS a couple of days to cash the check. If you apply for a withholding certificate, you want to confirm that the notification address that was submitted on the application form is the notification address of the accountant preparing the forms and of the closing agent who is holding the money in escrow. Because if the closing agent who's holding the money in escrow is not notified in a timely way, then they cannot submit the funds, and the buyer or the seller could be subject to penalty. What if you are a buyer's agent? If you're a buyer's agent and your buyer is planning to live in the property or invest, well, you got to explain to them, if you know that FIRPTA applies, what it may mean, right? A company cannot live in a property, right? So they cannot sign an IRS. Something that if your buyer plans on using a company, it needs to be discussed with the listing agent from the beginning. If your buyer plans to live on a property, the buyer is not required to sign the IRS residency affidavit unless the buyer and the seller agree that it is a condition of the contract and it is put into the contract. Now, you want to ensure as a buyer's agent that the closing agent is experienced with FIRPTA, that your title company holding closing is experienced in FIRPTA. The reason this is so important is because, remember, it's the buyer's ultimate apply with FIRPTA. Okay. Now let's talk a few strategies for sellers. Okay. If the seller knows that to them, what can they do to optimize their situation? Now, what I'm about to share with you is more a brainstorm. They are ideas as to how your seller can approach it more than advice. So please don't take this as tax or legal recommendations, right? The first strategy is that for any property, if you're a seller for any property under $1 million, you can decide to only market it to individuals who plan to property by asking them in the contract to sign the residency affidavit. If the seller is subject to FIRPTA, the that to ensure proper control of the transaction, they choose the closing agent that they have trust with, that they choose a closing agent that has FIRPTA experience, even if it means that the seller will pay for the owner's title insurance policy. So in many contracts, the condition to choose a closing agent is who will pay for the owner's title insurance policy. So if the seller needs to ensure control of the transaction so that the FIRPTA is submitted correctly, then they may need to pay for the owner's title insurance policy. The last strategy is to require that the buyer and the closing agent cooperate with the seller in applying with a withholding certificate. At least in Florida, in the as-is contract, if the seller will apply for a withholding certificate, the closing agent does not necessarily need to go along with that, for the reason that if the seller does not comply with the closing agent's FIRPTA conditions and policies, the seller is putting at risk the buyer and the closing agent with possible penalties. Therefore, the closing agent will say, if you do not follow my rules, even though you want to apply for a withholding certificate, I will need to send the money to the IRS. So this is a very delicate conversation, and this is something that really needs to be talked about beforehand. Now, the strategy number one, if the seller decides to, if the seller will sell for under $1 million and they will only market to individuals who intend to live in the property, the strategy is going to reduce your market size because now you eliminated all the investors. You also need to get the buyer to agree to the IRS residency affidavit. Okay, so this is a part of the negotiation between the listing agent and the buyer's agent. We recommend the listing agent, discloses it in the MLS and uploads it to the MLS as an attachment, and where both sides will agree that the contract is contingent upon the signing of that affidavit. Now, where the seller needs or decides to select a closing agent of their choice because they trust that the closing agent that they know that will handle FIRPTA appropriately, they may need to pay for policy because not all closing agents have experience handling FIRPTA. So this is a business decision. It's a business decision on the level of risk that the seller is willing to take by working with experienced versus inexperienced professionals, and any additional costs that they may incur. Now, what are some additional potential costs? Well, these are the Florida promulgated rates. If the property is worth $500,000, the additional cost of the policy is $2,575, for example. If the property is 300,000, it's 1,500. Shows you that more or less for properties under $1 million in Florida is about 0.5% of the cost of the property, more or less. That begins to diminish for properties over $1 million. Okay. So, in conclusion, FIRPTA is not a matter. It requires a CPA experience in FIRPTA. This law has many, many years that it has been in the United States, and it is essentially requiring that a withholding is done on the sale proceeds of foreign sellers, and that withholding will be applied to a possible capital gains tax on the appreciation of the real estate asset if it applies. Um, we at Folio have been working on FIRPTA transactions for many years. About 60 to 70% of our sellers are foreigners. So by default, we've had to develop a big expertise on FIRPTA. We have many services that we offer and become their title Sherpa, because any real estate agent who watches this video knows every transaction has something that we maybe haven't encountered before, and that we as Sherpas, maybe we've seen other transactions in our over 5,000 transactions that we've done in the last couple of years, and we can guide you both on the residential closing side, on the commercial closing, on the FIRPTAs, on the 1031 exchanges. And a big area of knowledge that we have is on the international virtual closings. Okay. I want to invite you all to scan this QR code. This will take you directly to our YouTube page, where I hope you will subscribe so that any new videos that come out, you will be notified of. We have some phenomenal content on the YouTube. We have content in Spanish. We have content in English. This content can be shared with your clients. We have videos on helping the client understand. Here is my information. I apologize if some of the stream did not come through clearly. Internet connection, but the gods of internet always have a way to play around with this. I'd love to open it up to any questions that you may have, and this video will be sent to you with the presentation after this presentation is over, and it will be published on our YouTube channel. So I wanted to open it up to questions for anybody who may have questions. Thank you, everybody who has joined. We've had several people come in and out. Any questions, please, you can put them in the chat. Okay. I am ensuring that you guys have my email address. It's ricardo@foliotitle.com. There is my WhatsApp number and my personal cell phone, where you can call me anytime for questions. We have a staff of over 25 people who can help you on these transactions. So please let us know. And with that, I appreciate all of you for taking this time to be with us this morning. And I hope to see you again soon on one of our other live streams. Have a great day.